Welcome to Real Estate Investing Abundance, the show for busy, fulfilled professionals like you to learn how to develop financial independence built on solid, passive real estate investments. Now, here is your host, Dr. Alan Lomax.
Hello, enlightened investors. So glad to be back with you again today. And we are going to have a wonderful conversation with Jesse Fragale, who is a commercial real estate broker for Avison Young and a real estate investor himself. He started investing in student rental properties a little over 10 years ago. As his passion for investing grew, he began investing in single-family homes and condos. Following this up, he transitioned to investing in multifamily apartments, and that is his focus today. And Jesse is also the host of Working Capital, the real estate podcast. Jesse, take us into the show and share an experience that helped you to be who you are today.
Hey, Alan. Thanks, first of all, for having me on. I appreciate it. Okay, so a formidable experience that made me who I am today. Probably how I got into commercial real estate was something that it developed a little later after I was investing in real estate. So for my background, I started investing pretty young, 19, 20 years old, when I started investing in single family or student rental properties where I went to school. And I had worked for probably 4 or 5 years after university in kind of the energy sector, finance, in the energy industry, but in a financial role. And it wasn't until at the time, my next door neighbor, or my dad's next door neighbor, because I was still surfing my childhood bed. He was an investment banker for one of the major banks here. And he knew that I invested in real estate and had basically kind of said to me, you obviously enjoy this stuff. And he's like, what are you doing kind of in the current role that you're at? Why don't you pursue commercial real estate as a broker? And it's funny. I wouldn't say it never came to mind, but it wasn't a career path that I had thought of doing. I thought that whatever, day job that I had would be separate from real estate investing, similar to probably some of your listeners who are, working professionals, doctors, lawyers, accountants. I thought the investing would just be a separate aspect, but he was right. It was something that I was passionate about. And I mean, you could make the argument that it's risky to kind of have all your eggs in one basket, so to speak, and that's why some of the people in my industry do try to diversify with their investments. But I think ultimately, I'm happy he kind of gave me that advice. And it was, this was something where it was probably 1, 2 in the morning. He was coming home from a bar close to our house. And, I was probably up to no good at that time. And the reason it was formidable is it was so out of character for him, because he was a suit and tie kind of guy that you saw pretty much in the day. And I think at that time, it was something that stuck with me. And what ended up happening was he connected me with the head of real estate investment banking at the firm that he was at. And I had met that gentleman. And it was kind of from then on, I started looking to actually get into brokerage as well as invest in real estate. So yeah, that's the one that comes to mind.
I guess obviously you enjoy the brokerage as well as the investment aspect, but going from the energy industry and the financial role that you were in to brokerage had to be a fairly big step and leap. How was that transition process, and really what drew you to brokerage?
So the transition process, you're right. Moving from any 9-to-5 job to brokerage can be a pretty drastic step. I mean, sales in general, but brokerage especially, because most commercial shops at the end of the day eat what you kill. So if you're not in a sales role already, you're kind of, it's a little bit of not a culture shock. It's a professional shock to basically have 100%, your 100% commission. So that aspect was definitely something that took some getting used to, but ultimately it was the right transition. Once you start realizing that you can produce income, you can start, engaging and networking with clients and building your book of business. So that aspect, it was yeah, it was okay doing that transition. And I guess what made it a little bit easier is the fact that since I was already speaking the language of real estate on the investment side, even though real estate, as you and your listeners know, it's not just one thing. There's retail, industrial. There's a whole slew of different areas that you can go into. At least the language is relatively similar. And I always tell younger guys that are firm, like, it takes a year or 2 years to learn the kind of the language, the nomenclature of real estate, the acronym soup. And that really is half the battle, because, once somebody sees that you're competent and you kind of can, what you're talking about, you can gain that trust a little bit more easily. So yeah, I would say that was probably what the transition was like.
So you made that transition from W-2 to total commission. I'm sure there had to be ups and downs during certainly probably the first 2 years, maybe even more than that. What was the most difficult part of that transition?
When we talk with younger individuals coming into our industry, or not even younger, just transitioning from a W-2 income to commission based, we usually say 5 years is really what you have to commit before, you say that it's not for me. We see a lot of people come in 2-3 years and they leave, and you really have to put in 5 years. But the first 2 years are definitely the most challenging. And that's really, it's just the fact that you're coming in cold, right? You're building your book of business from scratch. So I would actually argue that the second year is probably more challenging than the first, because I don't know for all firms, but most firms, at least here, JLL, Cushman, CBRE, there's typically a year that you have with a principal, in our case, because we're a private company, or a senior individual. So that first year is really an associate year that you're learning a lot. That second year, usually, if everything goes right, you're cut loose and you're starting to earn income on your own. So that second year is really the challenging piece. So I would say that second year is definitely the hardest. That's where you're really, taking the training wheels off and trying to build your own business on your own. So obviously in conjunction with a team in certain situations, but really that's where you start seeing if you're going to sink or swim. So I'd say that would probably be the most challenging aspect, was that second year and going out on your own.
And what exactly was the most challenging aspect of that?
It's just the uncertainty. I think you're coming off of any income job, exactly when you're going to get paid. And yes, the commission-based industry, there's no ceiling, especially in our industry. But yeah, the uncertainty, that's definitely the aspect that's probably was the most challenging. And then, you start realizing that it's kind of the competence confidence cycle or wheel. I don't know if you've seen that, but you build competence in a domain and you get more confident. And then when you get more confident, you build more competent. And it's kind of, you got to get down that path. And then once you're kind of hitting your stride, the uncertainty kind of goes away. You start realizing there's a rough formula for success in this industry.
Well, what do you find most rewarding about brokerage?
So, definitely the clients and it's the investing side. Like, I would just kind of put them side by side. The investing side is great because for me at least, when you have major acquisitions, you complete a deal, that's obviously, winning the championship, or, for the sports analogy. With brokerage, I think that stuff is certainly great when you sign a, big lease, or you sell a property. But I think the best aspect, in my opinion, of brokerage is that you're dealing with so many different companies. And that's what I find that's interesting, because it's not something you're likely to experience in the same way in investing. My clients can be anywhere from technology startups to, insurance companies, lawyers, people that are making software for some niche industry. And, you're starting to see over time how businesses in different verticals operate. And you can't help but learn from that, because if you're only in one industry, whether it's energy, finance, accounting, real estate, you kind of see how things are done in your space, where a lot of what is helpful. And I think this is kind of where the incubator and startup model is beneficial, where you can see various different types of companies and maybe take the best of those industries and try to incorporate that in your business.
Well, you had started investing actually as a college student, and I guess continued that even when you got into your professional role. What was it about brokerage that actually, from that midnight conversation? Was it the fact that you had had some experience in real estate investing that interested you in brokerage, and you thought that that could be a bridge to your own investment career? Or was it the fact that there really is no ceiling in terms of what you can make as a broker?
Yeah, that's a good question. I think what was impactful about that conversation was that I think what my neighbor was getting at was he kind of understood the type of job or the type of like my personality in general. And I think what he saw was that there, that aspect of you being able to earn what you can based on your merit. So if you work really hard, and obviously, you have to have luck in there as well, but you can pretty much dictate what you make. And I think another aspect of it was the fact that, he saw the current role that I was in. I chatted with him in the past, and I think he knew that this wasn't going to be a long-term thing for me. It was like I say at the time, 23 or 24, whatever it was good job, good money, all things considered, but it wasn't something I was going to be fulfilled with over the long term. And that's where brokerage came in, was this other aspect of not really having your own boss. Like, yes, brokerages have their broker of record or their managing director, depending on, what structure you have. But at the end of the day, our boss is our clients. And I always joke where, with individuals, if they're thinking about getting in sales, I like the idea that I'm getting paid by the person that I'm providing the service to directly. So, the client is paying me directly. Obviously there's an intermediary through the brokerage, but I'm satisfying them. So my clients are my boss. And that relationship to me works a lot better than having a middle manager, good or bad, who's the one that's you're kind of taking direction from. Whereas I rather see, the person that literally my service is going out to. Like if you're contracting, you're doing work for a client, you're seeing the person, and there's that. I think there's a purity of that type of relationship, whereas in more complex organizations or more hierarchical organizations, you don't get that.
And that is so true. In most corporate situations or hierarchical situations, the rewards are very different, and they aren't as immediate and as direct, particularly from the clientele that you are generally serving. Well, you started out with student rentals while you were a student, and you progressed to then investing in single-family homes and condos. What was the compelling reason that you transitioned from the student market to, I guess, general single-family and condo?
Yeah, so there was kind of at least as it stands today, it was kind of I look at it three phases. I started in student rental properties. That was really a function of the fact that I was in school, and that's what I was exposed to. So the first property I bought was a student rental property. And then from there, like progression in any area of real estate, you typically start in one domain, you add to that domain typically. And I understand that with our industry, there's no typical, but I started adding student rental properties. And then once I moved back home, where I went to school is probably an hour and a half drive from where I call home. So for me, it was the fact that I had managed these student rental properties, for a couple of years outside of school after graduating. And it just became a little bit more challenging because at that time it was just myself and property management in those areas. So that's when I started to look at the market. And this was kind of, I would say 2010, 2011, there was a lot of good buying opportunities in Toronto where I'm from. So, and then from there to now, there's, quite a bit capital appreciation. So for me, I started buying condos in Toronto. Some of them I sold on assignment or wholesaling, and use them interchangeably. And so from there, went from student rentals, bought condos. I consider the student rentals single family, even though they have license for different like boarding size. And then from there, it was kind of a pivot to look at coincidentally, I found the partner that I work with today through brokerage, and he works in my brokerage. He does something different than I do, but that's when we kind of made the transition to selling, or it made the transition to buying multifamily apartments. And part of that, leaving student rentals where I went to school, selling them to create a bit of a war chest for the next move, buying a few properties and selling in Toronto. And then from there, I was in a position that we partnered and then bought the first multifamily property in 2016, 2017.
So I'm supposing you were brokering apartment and multifamily deals as a broker prior to your actually going into it yourself. Is that correct? Or?
So no, it's funny that you asked that. That's the distinction with my partner, John. He's an apartment broker. So that's what he does. He does buys and sells apartment buildings. Whereas myself, I work in office leasing and sales predominantly. So for me, that's where the reason I meet so many different companies is because I'm dealing with larger companies and smaller companies that are looking for space, whether it's in kind of the downtown area, but we kind of service, I think 87 offices, we service the globe. But that was one aspect I think that was helpful too, because I was in a slightly different vertical than what I invest in. So it was, something that, we had looked at some apartments. We talked about potentially buying something, and then that, was kind of a perfect storm where we had an opportunity and kind of went together on it.
Well, did you intentionally make this transition, or was it something that kind of just came along and there was an opportunity there and you seized the opportunity?
So it was definitely my goal to move to larger properties, and it seemed like a logical transition from single family. Even though I work with a lot of brokers that are in industrial and office, those are fairly capital intensive for the most part, and they're a bit more challenging especially office, unless you're talking institutional capital or you're raising quite a bit of capital. And then looked in industrial. Industrial is extremely and still is extremely tight in terms of the market. And then there's the other risk of, when you have vacancies in an apartment, that might be one of 50 people. When you have vacancies in industrial, might be 50% of your income. So we wanted to get into commercial, and we thought multi-residential was kind of the best route.
You have invested in both Canadian markets and USA markets. In a lot of ways, I think there's a lot of similarity between the two countries in terms of real estate markets and in terms of regulations and legalities. But what are some of the main differences between Canadian rules and regulations as opposed to USA?
Yeah, so I guess the easiest one that people in the States are always a little surprised about is there's no equivalent to the 1031 exchange. So it doesn't exist in Canada, which is, for those that don't know, it's the idea of being able to purchase an asset, selling the asset. And if you sell within a certain time frame, you can not have to pay taxes on your gain. And you can, as long as you sell for a certain time frame, find a new property, and it has to be a like and kind asset. So, you're buying in Canada, when you sell, you pay taxes. It's just the bottom line. So that's why I think we have a bit more of a culture of a buy and hold culture. That's just my opinion. I think that's part of the reason. Whereas I find that in the States, there's a lot more velocity. Now, 1031 exchanges, as I'm sure you know, and listeners know, it's not a slam dunk, right? It's not easy to make the stars align that you're going to sell and then find the other one. But that's one thing. We don't have that. I think another big one that a lot of Canadians make the mistake of is they go down into the States, they see a late night television or a late night infomercial, and they buy a property and they use an LLC as the structure. And Canada doesn't recognize limited liability companies. So what ends up happening is you create an LLC in the States, and then the CRA, Canada Revenue, they look at that as a corporation. And that's not a good thing for investors, because then we're getting taxed twice. We're getting taxed in the States and taxed in Canada. So the way we deal with, the LLC, a lot of people are like, well, what would the equivalent be? And if it's about structuring where you have kind of a managing member and investors, we typically will use a limited partnership. So that's something that we would do for that. So yeah, two that come to mind. But like you said, the one nice thing with Canadian and US investments is the tax treaties that we have between the Canadian American government. They're so mature and developed that a lot of complications are streamlined based on, the elections that you can make and the credits that you get. So, both seems like the IRS and the CRA, they're somewhat buddy-buddy. So, there a lot of the issues you might have overseas or in different countries, you don't have between the States and Canada.
Well, from my understanding, limited partnerships in Canada work pretty much like LLCs work here in the USA. Is that correct? Or?
Yeah, it's exactly like the managing member is the general partner. The limited, the members are investor member level. That's the limited partners. But yeah, you're right. That's pretty much how it's pretty much our version of the LLC, especially if you're doing a syndication model.
Yeah, I mean, of course, in the United States, we have the option of using one or the other, and most people do use the LLC, but we also see limited partnerships as well. You had mentioned that buying opportunities were good in 2010, and well, they certainly were here in the United States, really up until about 2014-15, when finally we started recovering from 2008. Canada, I think, was also hit pretty hard in 2008. But tell us about that time period. Was it as bad in Canada as it was in the USA? So
I think historically we have a pretty conservative banking system in Canada, and I played armchair economist. So try to educate myself on the history of what's happened in the States and Canada from the real estate point of view. The early 90s, the commercial real estate crashes in both countries. Interest rates in the 70s. So I try to kind of keep up on that. In terms of 07, 08, 09, I think you're right to say that it's not, Canadians and Canada did feel the impact of the, financial recession. I don't think at the extreme amount that certain areas in the States. And I think part of the aspect was in the States, you had a credit market almost completely dry up where, normal operating companies were having trouble getting credit. And there was definitely kind of an aspect of that happening in Canada as well. But I think our conservative history and nature of our banking, I think, is what kind of helped that. And the other piece too is I don't think, I think this was also part of the reason that the Great Depression Canada wasn't hit as hard. We have 4 or 5 major banks that have a branching system. So, when one branch is hurt, there's not the systemic risk that there is in the States where you could have, a state, bank or like a major bank in an area. And if that bank is wiped out, that's that individual bank. So I think that is an aspect of it. But there was certainly from a real estate point of view, I think there is a similar effect. There were prices that were completely out of whack in 06 or, whatever you want to call it, frothy. And I think there was that correction. And again, like you said, there were buying opportunities in most of the major markets, and even the tertiary markets. But I'm thinking Vancouver, Montreal, Toronto, there was a lot of good buying opportunities. And I think lastly, the other thing that kind of helped us through it was we didn't have the same type of, I guess you would say, latitude with a lot of our mortgages. No doc loans, ninja loans, like being able to get approved for something without putting, a T4 or W2 and showing income was just not something that was part of our banking. Like we had fairly stringent requirements and still do. Some would say there's a little too onerous today, but that was definitely an aspect. So that scene where, you have the movie The Big Short, that aspect of people buying 5, 6, 7 places and doing it without verification of income. I think that, it's Hollywood to begin with, but I think that was definitely more of a fiction in Canada. We didn't see that type, there were aspects of that, but I don't think to the extreme as some American markets.
Well, that's interesting correlation there. So, Jesse, you've got a lot to offer. Tell our viewers and listeners how they can get in touch with you.
Yeah, sure. You can go to workingcapitalpodcast.com, or if you listen on Spotify, iTunes, Working Capital, the real estate podcast. You can also go to YouTube, Jesse Fragale, Fragale, and same name for Instagram. If anybody has any questions, happy to answer them. Direct message on Instagram.
Well, Jesse, it's been a delight having you. Enlightened investors, glad you were with us today. Look forward to being with you next time. Thank you, Jesse.
Thanks, Al.
Thank you for tuning in to Real Estate Investing Abundance, brought to you by Steve Talker Capital, a company working for passionate professionals like you to develop financial independence built on solid, passive real estate investments. As part of our efforts to make the world a better place, Steve Talker Capital contributes to activities and organizations committed to better understand the equine. These endeavors attempt to enhance the human treatment of horses worldwide. Steve Talker Capital, working for a world where all creatures, great and small, flourish abundantly. For resources to develop your financial independence, connect with us at stevetalker.com.